Chapters 1 and 2 have been preparing us for the actual accounting process. We learned to analyze transactions by deciding the accounts affected in Chapter 1. Then in Chapter 2, we chose the debits and credits for those accounts. Now we're going to enter the debits and credits into the accounting records. I'll be demonstrating that process by completing a few transactions in problem 3-3A. We're going to enter our transactions in the general journal here, and then we're going to post those transactions over to the general ledger accounts. If you'll look on page 124 of your text, problem 3-3A says on June 1st, Julie Boyles began an accounting practice called Boyles & Associates. During the first month of operations, the firm completed the following transactions. So the first transaction says June 1st, Julie invested the following assets in the firm: cash of $3,700, office supplies of $600, and office equipment of $16,500. So we know that this is an owner's investment. So we're going to enter that investment into the general journal. The first step in entering a transaction is to enter the date. And on the first line of the first page, we always enter the year. And then the month right underneath, so we'll know what month we're talking about. And then we're going to enter the day it occurred. Okay, so for this transaction, we've got 3 debits and 1 credit. The owners invested cash, office supplies, and office equipment. And all that totals up to a capital investment. So we're going to debit cash for $3,700. Then we'll debit office supplies for $600. Not in that box. And then we're going to debit office equipment for $16,500. Okay, and then the credit is going to go to Julie Boyles Capital for the total of $20,800. And the last line of the journal entry is always the explanation. So in your own words, just tell what happened in that transaction. So I'm just going to enter owner's investment in the business. Okay, keep in mind when you're entering debits and credits here that you always use account names from the chart of accounts. Do not put descriptions, put actual account names. And then here you will describe what happened in the transaction. Okay, second transaction that occurred was on June 1st as well. And this one says that Julie paid rent for the month for $775. So we're going to debit rent expense because that would be our debit account for $775. And then we paid that with cash, so we're going to credit cash for $775. And then for the explanation, we'll put paid rent for June. The third transaction occurred on June 3rd. Purchased office supplies for cash, $225. So the debit will be to office supplies for $225. And we purchased those for cash according to the text. It was not on account, so we're going to credit cash for $225. And then we'll enter the explanation, purchased office supplies. Okay, we'll stop there with our transactions and we'll start to post some of these. So if you go back up to your journal, we're going to take it one account at a time and spread our posting over to the general ledger. Okay, the first account tells us that cash is debited for $3,700. So we're going to go over to the general ledger, find the cash account. We're going to enter the date just as we did in the journal. This occurred on June 1st. The debit was for $3,700. Now at this time, cash does not have a balance, so we've given it a $3,700 debit, so the cash balance is a $3,700 debit. Then we'll enter the posting reference. The posting reference is a cross-reference between the journal and the ledger. It just tells us in the journal where this posting came from. And it came from the general journal, so we'll enter GJ page 1. Then we'll go back over to the journal, and in the posting reference column in the journal, we're going to enter the account number for cash. This posting reference tells us two things. It tells us that we have posted it over in the ledger, and it also tells us where we posted it to the cash account. Okay, next account is office supplies, has a debit for $600. So we'll go over to the ledger, find the office supplies account, enter the date, enter the debit of $600. Office supplies has no balance, so that debit balance comes right over. We got the information from General Journal, page 1, and then we'll enter our posting reference over here to show that we've posted that transaction. Office equipment is the next account, gets debited for $16,500. So we'll go down to office equipment, enter the date, enter the debit of $16,500. Since it has no balance, that balance gets carried over. And it came from General Journal, page 1. And then we will show that that has been posted in our journal with the posting reference. The next account is Julie Boyle's Capital. It gets a credit for $20,800. So we'll find her capital account over in the ledger, enter the date. The credit was for $20,800. So this credit balance is going to come right over because at this point she has no balance until she made this investment. So now her balance in her capital account is a credit of $20,800. So that's from the General Journal, page 1. And we'll go back over and enter the account number. So we know that this entire transaction has been posted because the posting references tell us so. The next account is rent. It gets debited for $775. So we'll go over to the ledger. The date was on the 1st. The debit was for $775. The balance carries over. And it came from General Journal, page 1. And the account number is 511. Cash gets a credit of $775. So we're going to go back up to our cash general ledger, enter the date, enter the transaction, which was a credit of $775. Now it's time to balance out. When you're balancing out accounts in your general ledger, if you have a debit balance and you add another debit, you would add the two together and get a debit. If you had a credit balance and you added another credit, you would add the two together and get a credit. In this case, we have a debit and a credit, and they're different, and that's our signal to subtract, just like we did on the T account. So $3,700 less $775 is $29.25, and the debit amount is higher, so the balance stays on the debit side. So the balance is a debit of $29.25. The transaction came from General Journal, page 1. And so we'll enter the posting reference there. Next transaction occurred on the 3rd. Office supplies is debited for $225. We'll find our office supplies account, enter the date of the 3rd. It was debited for $225. Okay, we have an existing balance of $600. It's a debit, and we added another debit, so we're going to add those two and get a debit of $825. The posting reference, the transaction came from General Journal page 1, and we're going to enter 113 in the journal posting reference column. Then we have cash gets credited for $225. We're going to take that back up to the cash general ledger, enter the date, the credit of $225, and we have a debit and a credit. That's our signal to subtract the two because they're different. When we subtract, we get $2,700. The debit is bigger than the credit, so it stays on the debit side. The posting reference, it came from General Journal page 1, and then we're going to show that we've posted these transactions.